All right, let's just jump right in. On November 12th, 2025, the stock market gave us, what can you even call it? A serious case of whiplash. It was just this crazy day of dizzying highs and puzzling lows, a real head-scratcher that split the market right down the middle.
And you can see that perfect split right here. On one side, you've got the Dow Jones, home to America's big industrial giants, absolutely soaring to a new record high. We're talking closing above 48,000 for the very first time. But then you look at the tech-heavy NASDAQ, a totally different story. It actually slipped into the red, dragged down by some of the biggest names in tech.
So what in the world is going on here? That's the big mystery we're going to unpack. How can you have one part of the market celebrating while the other one is, well, kind of freaking out? How can investors be so wildly optimistic and so nervous at the exact same time?
To figure this out, we actually have to start with a whole lot of nothing. A silence. It all goes back to the end of that massive record-long government shutdown and the information vacuum it created.
So yeah, after 6 grueling weeks, they finally made a deal. The government's back open. Whew, right? And look, on the surface, that's great news. But, and this is a big but, the damage was already done. There was this one permanent problem that just turning the lights back on couldn't fix.
And here's the problem. All those government agencies, the ones that give us our most important economic numbers, they were closed for so long that they just missed a month, the entire month of October. So those key reports we all wait for on jobs, unemployment, inflation, they just vanished. Poof, gone.
And look, this isn't some conspiracy theory. The White House came right out and said it. The data is likely gone for good. Think about that. A permanent black hole in our economic data. We're just never going to know what happened in October.
So if you have a black hole in the data, who does that hurt the most? Well, it leads us right to the Fed. And for them, this wasn't just a problem. It was a full-blown crisis. I love this analogy. Think of the Fed as a pilot flying the entire U.S. economy. To do their job, they need to look at their instruments, right? They need that data. Well, with the jobs and inflation reports gone, it's like 2 of the most important dials on their dashboard just went completely dark.
And it wasn't just a random metaphor. The White House press secretary literally used those exact words, flying blind. And talk about bad timing. They had a huge interest rate decision coming up in December. I mean, you couldn't pick a worse time for this to happen.
And the Fed chair himself, Jerome Powell, he had a great way of putting it. He said, what do you do if you're driving in the fog? The answer's obvious, right? You slow down. You take your foot off the gas. And that's exactly the cautious mindset the Fed was forced into.
Okay, so let's recap. We've got massive uncertainty, a data blackout, and the Fed is basically driving in the fog. So, how in the world did the Dow manage to hit a record high in that kind of environment? It makes no sense, or does it?
Well, it comes down to this classic Wall Street saying. As one analyst put it, the market started climbing that proverbial wall of worry. Basically, instead of freaking out and selling everything, investors just sort of shrugged, looked past all the scary stuff, and found a reason to buy anyway.
And this move has a name. It's called a market rotation. It's a classic playbook move. When things get weird and uncertain, you don't necessarily pull all your money out of the market. Instead, you just move it around. You rotate out of the risky stuff and into what feels safe and stable.
And that is precisely what we saw. Money just poured out of those high-flying growth sectors like communications, where a lot of big tech lives, and it went straight into the more, well, boring but stable sectors like healthcare and financials. And guess what? Those are the exact kinds of companies that make up the Dow Jones. And that's our answer. That rotation is what lifted the Dow up while pulling the NASDAQ down.
But wait, that is not the whole story. Because at the exact same time all this defensive shuffling was happening, another group of investors was doing something completely different. They were ignoring the fog completely and making this huge long-term bet on the future. And that bet is on one thing: artificial intelligence. I mean, underneath all this day-to-day market nervousness, there is this unbelievable, unstoppable wave of excitement about AI. The amount of cash flowing into this space right now it's just insane. And hey, don't just take it from me. Listen to the CEO of chipmaker AMD, Dr. Lisa Su. She's predicting the AI market will be worth, get this, over $1 trillion by 2030. That's trillion with the T.
And here's the kicker. That $1 trillion number, that's not even for all of AI. That's just for the data centers, the physical hardware, the pipes and plumbing that actually make AI work. We are talking about a gold rush of epic proportions here.
This isn't just talk, either. This is real money being spent today. The AI company Anthropic just announced they're dropping $50 billion with a B just to build out their own infrastructure. That is a massive, massive bet on the future.
So this is it. This brings us right back to our tale of two markets. You've got one group of investors playing defense, worried about the fog that's right in front of them, and then you have another group looking way, way out at the horizon, convinced that this AI revolution is so big, it just doesn't matter what the weather is like today.
And that leaves us with this one really fascinating final question. When you can't see what's right in front of you, when all the official data just goes dark, maybe the only thing that investors feel they can truly see clearly is the distant horizon. Perhaps, in an economy that's flying blind, the only truly certain bet is on the transformative power of the future.